Hello everybody, Brian here from quantlabs.net. Just wanted to go through a video I just finished. This part here, it's about an hour long, goes over analysis overall of the top performers historically, all the major markets for currencies, indices, as well as commodities. I include, of course, Bitcoin. And then in this section here, I go over more in detail what it looks like when you deploy into certain markets. And from what I'm seeing, to cut to the chase, is Germany markets, stock market that is, as a defensive play for a pretty reasonable outlook. And I have in this section here the charts to show that using the Eurostats and comparing that against other indicators and sectors within Europe or the Euro Union. And also for currencies as a defensive play, if you need, is the euro against the Swedish kroner. And again, this part of the video I show quite a big focus on Sweden, and I do a comparison against other members within the Eurozone, including the UK, which doesn't look too bad. So if you want to watch the whole video, I'll explain everything in full detail with the raw data as well as the charts. So hopefully you like it. Talk to you later. Hello everybody. Today is April 2nd, 2018. Today's a great day to go through the news in the markets, as it was a pretty brutal day for anybody trading out there. S&P down 2.89%, Dow Jones down 2.4%. Where do we go? Where do we hide? Let's get into the Americas, the indices. Let me just see here. I don't usually use markets. I don't even know how to use this, so screw it. Oh, let's try this one. Nope. Anyways, doesn't matter. Full coverage of the market sell-off. Yes, market sell-off. Okay, let's just say it was a big down day for everybody. So let me show you what I've got. I've got something of interest for hopefully a lot of people that you will not hear about in the news. Been working on it for the last little bit. Now, what I'm going to show you is something I have gone over in full detail and full glory on my YouTube channel at Quant Labs. Just Quant Labs, we'll leave it at that. So let me just get this puppy all loaded up. And we are going to look at some spreadsheets and some charts. All right, so let's see, where are you? All right, should be here. There we are. Okay, so first things first, we're going to look at the Forex pairs that are really, I won't say hot, but based upon my strategy, or call it whatever you want. I'm just loading everything up as it is. I will be starting up relaunching a analytics service. I haven't really been marketing for the last few months, and I just want to show you some of the results of this. So this is the news that you will not get anywhere. This is using the source of Dukascopy data. This is just sample data. I've downloaded all the data from Dukascopy. Again, all the videos, if you want to know how it's done, go to my YouTube channel. But we're just focusing on the data. When you look at the top, let's say three pairs here in the world of Forex, we have the Euro, Swedish krone, is it? USD, Swedish krone, and GBP against the CAD, Canadian. And then we also move into the Euro Hong Kong dollar, and then followed by the Euro Canadian dollar. Now, if you ask me, these are definite plays for defense. Now, this tells me that if you are a portfolio manager of multi-billion-dollar funds, ETFs, anything, you have to trade, you have to look for a return. When you get a huge negative over the last couple of weeks, it's been a down quarter, and it's been the worst, I believe, in 2 years for 2018. And you have to still trade because you still have to get yield. So there's nowhere to go. But as I said, you won't hear about this in the headlines in the major markets. But I have this complete system, again, using Dukascopy data. Numbers don't lie, the data don't lie, on where money is going. Now, if you look at the top 5, which are just listed in the world of Forex, this is the currencies, I do believe a lot of the pension funds and what I call hot money is moving into places like Scandinavia. Specifically, it looks like Sweden. Both the euro as well as the US, as they prepare for ramping up of what looks like to be a full trade war with China. So there needs to be where these funds can hide out and still get a relatively safe return. So this is where I believe they're going into, is the Swedish krone, somewhat the Canadian dollar, and definitely I have been tracking, if you saw a report I put out 2 weeks ago, in Asia and Hong Kong, but it looks like even with China, there is probably a concern in Asia as well in terms of where currencies are going to go. So it looks like these are where the potential, I won't say hot areas are, but with the currencies I've listed, these are what we're looking for right now. And then if we move further into commodities. Now, this is very, very interesting. Now, this data goes far back to 90 days. So this is start of 2018. Okay, let's look at another another spreadsheet here. Similar format as before. Now, before I continue, always remember that what I just showed you in the currencies or the Forex, there is no leverage. Okay, this is just straight up one-on-one trading. But here we are for the next top 3 of these quote-unquote commodity. Very interesting. Bitcoin has still got quite some decent performance. We'll look at the charts. We'll look at some of the valuation through Fibonacci retracements and show you how we proceed. But we have here, number 1 is the Bitcoin against the US dollar. Again, same data source, Dukascopy, but these are the only ones we have access to. I've gone over the commodity one on my previous video, but the top 3, and I'm really only going to focus on the top 3, is Bitcoin against the US dollar, the TLT, which is a 10-year treasury note, and oddly enough, copper is up there, but you don't see gold anywhere. Actually, it looks kind of negative historically. Now, I believe the junk bond, people are now looking for investment grade bonds. So yeah, they're not putting any money anymore into junk bonds. As for gas, we're now, as I said, this is April 2nd, so we are now moving into the spring season where gas is no longer in demand. Classic futures trading. So that's a commodity. There's one other area that is quite interesting, is the indices. These are the equity markets. Now, again, I've got 35, I believe, for equity. So when I load those puppies up, I'll show you the top 3, let's say. And it confirms what I've been thinking and what I've been seeing in my Bloomberg daily analysis through the news app. And again, I go over that millions and millions of times. So again, just give me a second while I load this guy up in my spreadsheet here. Okay, so again, we have over 30. So what we're looking at here is, if I sort this, as I usually like to, now I can do this through automation. This will be presented in this quant analytics service that I'll be putting out there. But these are the spreadsheets I'll be using as a reference point for my outlook, but it won't stop here, of course. Now, here's where we can confirm our theory. 2 weeks ago, you would have seen the top were the U.S., okay? The tech especially, but you can see here, tech has definitely dropped off. But the funny thing is, and again, we'll look at the charts here to confirm this, is looking at the slope and some other indicators, statistics that we've got here. Again, look at the past videos I put out on how this is generated. You can see here, this is a classic defensive play. Everyone pours all their cash into the Japanese markets. If it's not the Nikkei, maybe it's the topics. Who knows? But that's where they go and hide out using the Japanese markets as a defensive play. Oddly enough, there's still some performance that you're going to get out of the top 30 for this one right here. And then there is some defense plays as well as in the German markets as well. And that's what we're going to focus on in the charts right now. So one of the things that I look for is the performance of this results here, okay? When I look at the results of, let's say, the commodity and compare the results of, let's say, the top three, we can definitely see that Bitcoin is possibly the best performing. Even though there's a lot of volatility, we can definitely use automation to our advantage to be able to hopefully gauge that. Now, if you have not seen the Python algo trading, Python 3 infrastructure components course with the cryptocurrency in there, I do have 3 videos in there that will show you, trying to show you how to use forward-looking data to be able to measure Bitcoin. And of course, Bitcoin kind of percolates throughout the cryptocurrency markets. So Bitcoin is a really good index for that. And that seems to be a really strong indicator. And last year when there was turmoil, it was confirmed with the Bloomberg news that, yeah, Bitcoin is, oddly enough, one of the safer places to be. And we'll confirm that in a minute. But then when you look at the next best performing, you have the U.S. markets, okay? Or sorry, the stock indices. So obviously we have the performance of the Japanese yen, or sorry, the Japanese index doing quite well. Followed fairly closely behind is the U.S. Top 30, as well as the Deutsche or the German index. Everything else I'm not going to really care about. I just want to focus on the top performing, and nowhere close is the Treasury. Okay, so if you were to ask me how would I deploy my cash in a portfolio for, let's say, tomorrow, tonight, or whenever for the next trading sessions, these are the assets I'd probably focus on. Because again, when you look at the Forex market, it has been confirmed that because of the political risk, the trading turmoil that Trump's now bringing in with a trade war business, the Forex markets are getting killed off. I'm talking about top performance. So yeah, these are the places you want to be deploying over the next few days. And because of this type of data, you will not get this from your cousin Johnny, as I always like to refer to, or some blog, or even any of the top analytic quantitative platforms out there. You have to generate the data yourself. So that's what I've done. And again, these are the places I would put my capital. Again, I'd probably put it into cryptocurrency, specifically Bitcoin, and then Japanese markets, followed probably by the U.S. top 30, and that's it. That's where I deploy my capital for tomorrow. And again, it's because we have these charts and they confirm those theories. So let's go over to coinmarket.com and let's see what's going on with Bitcoin itself in the world of Bitcoin. So here we are. We've got, in the last 24 hours, 1.84% move, which is quite strong comparatively to the other indices that, let's say, the Japanese top 30 for the U.S. and maybe even the German one. But here you can see overall that there are quite positive changes in the crypto markets, and that's why there's so much interest in these markets. Now, again, I'm not going to go into the crypto outside of Bitcoin, but trading this stuff is a separate video, a separate strategy. And again, if you have not seen or gotten access to my Python 3 infrastructure course, you may want to get in on that, because I show you a package that you can use in Python that can specifically focus on that. And I'm probably going to look at that more as the markets come off, and you're going to see a lot of the positive moves, daily moves, through the top 10, even when you look at a crypto called Stellar, a 12% move, that's pretty strong. But even if you were just to focus on, let's say, Bitcoin Cash, Litecoin, Ripple, you'd be doing okay. But all these other ones are tough gigs. But they're very powerful indicators of the performance when the markets go crazy. There are now more and more people diving into the crypto market for safe haven, oddly enough, because there's nowhere else to go in terms of performance. All right, so let's check out some of these charts. All right, so I'm going to pull up my commodity folder here, and let me just go into it. We know that Bitcoin quite possibly is the one with the best performance, as we talked about. So let's check them out. Okay, so here we have a bunch of charts here. We have different analysis type or analysis. We have 3 different time frames. We are able to analyze based upon trend line, statistics, buy and sell signal opportunities, moving average, and Fibonacci. And that's for each time frame of the daily, 4-hour, and 1-hour moves. So again, we can get somewhat a long-term play over 90 days, a 4-hour over 90, and these are 4-hour charts, as well as hourly. So the hourly is obviously more for meant for intraday trading, but I have beyond many months looking at anything below hourly. That's a tough game to actually make money in. So I'm trying to slow down the trading to get better performance, because unless you have a bigger account and you're able to do a faster, higher frequency like HFT, high frequency trading, yes, you could make a lot of money at it, but you have to have a larger account to be able to pull it off. So we're just going to focus on the daily, 4-hour, and 1-hourly chart. So the one that I like to really look at is the trend lines. Now, just so everybody understands, is that what I'm looking at is the trend lines, or sorry, the charts themselves, the dates and all. I'm not happy about. This will eventually get replaced with, if you've been watching my chart, my YouTube channel, I'm using a new one library called Chart Direct, which is much more professional and better for data for the dates. So here are just the number of periods, but you can see here it's just there's virtually no performance. But we'll take a look at the Fibonacci for the value of Bitcoin, and this is what I like about Fibonacci. So that's right here, and again, this is daily, so we'll be able to historically just check it out over the last year and see where the valuation of Bitcoin is. As you can see right here, these are your levels. This is your zero line right about here. Now, here is your golden, what they call the golden zone right here. So as you can see, the closing price around April right here is below that, which means, hey, this is really good value to jump into. Now, you can still confirm through various technical and analytical indicator means to be able to value where Bitcoin is. So let's check out the moving average, which is a good one. It's very popular. Now, again, this is all historical, okay? This is all historical. We can see here that this is our long-term, slow-moving average, which I believe is 100 or 200 day. But the Bitcoin closing price has definitely breached that, which tells you buying opportunity, right? So if you look at the past, now all these charts are a year performance. So yes, it will include all the skewed whatnot, but we can break it down by looking at the 4-hour and hourly. So we'll do that in a minute. So these are your returns of daily moves over the last year, and these are your percents. Of course, we have some moves here that are more extreme, which is fine, but just lately, when you look at that one chart that I just showed you, the Oh, let me just get back to that. This one here is the daily moves. Bitcoin hasn't really performed all that well. It's flatlining. As a buying opportunity in the long run, I wouldn't be doing it. But if I was to trade on the long run, I'd probably trade it. Now, this is the confusing part, is when do you go in and when don't you? Well, we have some more indicators for that. So this is the buying, selling signals, opportunities that you will get over the last year. You can see, obviously, we've had that huge run up for Bitcoin, which is nothing but buy. And as soon as you see the selling, that momentum is just dropping off and people are bailing on Bitcoin. But we've got the valuation saying, hey, it may be an opportunity. But the question is, are we sure about that? But as I said with the moving average here on the daily chart, it has breached the that long-term moving average. So yeah, that's something to be concerned with. So these are the daily charts. But that's why we have now the 4-hour charts. It's sort of like, what should we do? Now, maybe we can look at the trend lines here and maybe we could get some better momentum on the 4-hour. Let's check it out. Again, we see downward move. The resistance here in the red is less and less, which is a good sign, but we obviously have less support here on the long run. But I don't need to go further into that analysis, but let's just say we want to look at on the short term, and this is where the automation is very useful. If you ever want to do intraday trading with automation, you can clearly see on the hourly, it's still on a long-term downward movement. So maybe if I was to deploy cash into this trade, it would not be something I would recommend at this point. But if and when we get our patterns implemented, that's where the patterns are going to be very useful to be able to figure out when that bottoming process will take hold. But for the time being, we can look at the hourly moving averages, and you can see here's our long term. It is still been beaten down for the last while, but here is the interesting thing, and that's where the patterns will come into play. But as I said, we don't have them implemented yet. Soon to come, but that will be a nice one. But you can see here again with our Bitcoin, that long-term downward trend is just killing off the performance long-term and even on the intraday performance of Bitcoin. My advice, probably stay away at this point until we have better analysis to be able to analyze the bottoming process with the patterns that we want to use. Okay, so let's go back to our spreadsheets here. And what we said were, we will look at these two, the Japanese index and the US 30-day and the German. Now, again, we're just looking at the top 3, 4 that we think we're going to get some decent performance out of. Now, I know if I did the whole thing over, let's say, 30 hours, or sorry, 30 plus, just in the indexes alone, or indices alone, that's going to take like a 2-3 hour process. Now, I have automation to obviously expedite that in a very exponential way, but I'm just trying to show you how to do it from an analytical point of view, from a human perspective. So what I'm going to do is I'm going to look at these top 3, Japan, US top 30, and the German, okay, using my charts. I'm not going to use Jforex. There's a lot of other ways I can do this. Then I'll look at these two pairs, the Euro Swedish and the USD Swedish, and see what we've got brewing in those, just as a sampling of where things may be. But if I was to run this, all of the automation for all of these instruments, close to 100, I bet you I could find way better opportunities. But I'm just showing you what most humans are probably going to look at using past performance. So let's move into the equities. So the first one we want to look at is yeah, let's just do that because I'm thinking probably the treasury would be a good one to go into, but let's just stick with what I promised. And we've looked at the commodity, right? That's Bitcoin. Now we're going to look at the equity. So the first one we want is the Japanese index. So let's check it out. So it's the same process before, same charts, same everything, nothing fancy. But I said those charts that you're looking at with the dates will be much more professional. So, but for now, they give you a decent idea of where to go and what to do. Let's look at find the Japan. Okay, so here's the Japanese. So let's check out the trend line. So here is the interesting move right here. Will that continue or will it not? When you look at the long term, it's a straight up trend, okay, on that trend line. Now let's check out the stats. This is the momentum of statistically on the daily return moves. Let me just see. Ooh, no. Yes, this one right here. Okay, so you can see it's been more negative than positive. Wah, wah. So this is definitely a defense or a safety haven for global traders in the hot money front. Let's check out the buying signals. Okay. Again, you can see that performance has been pretty stellar. I bet you, if I remember, there was some outperformance in certain areas with the Japanese versus the U.S. because the U.S. was driven by tech. But you can see here, this is that move. This is the most recent move up. And again, I believe that is because of how the market's been clobbered over the last few weeks. An average. This is the important one as a forward-looking gauge. So here we have an opportunity right here because yes, it is below our long-term trend, but this is where it gets very interesting. This is obviously a confirmed. This point right here is confirmed selling opportunity because why? This 50-day versus the 20-day, they cross. So we can confirm that yes, the markets have gotten clobbered. But look at this. Now another thing people may not realize is if you really want to know on forward movement, it's how tight this range is right here. Between the blue moving average and the red moving average. Because right here, it's starting to tighten up a little bit. Not quite a buying opportunity. It's undervalued for sure. But right here in the last few weeks, this could have been a buying signal right there. And it's widened again. But this momentum may bring back that buying opportunity if you hang out for a couple of days to watch that. But definitely this says right here that the moving averages, shorter term, the faster moving averages have dropped below and breached the long-term trend. So there may be, just depending upon this little guy right here and what happens over the next couple of days, once it starts to tighten against the red, then you know as it comes closer, you are moving into a buying opportunity using these instruments. Of course, it's going to be better opportunities as we progress. So let me just go back to my chart here. Now, that's something definitely to watch. Again, knowing this, I don't know if I'd deploy capital right away, but I'm sure there is some buying opportunity. But again, I'm just using that chart as one of the only references. So did we? Yeah, we checked out that. We checked out this. So let's see the valuation of this Japan on the Fibonacci. As you can see here, it's odd. very, very odd, because here we are in our golden zone. Boom, it hit that opportunity. So maybe people are watching this level right here and said, oh, we hit that level, buying signal, buy, and that's why it's bounced back. And not only that, they're probably, as I said, using this index, the Japanese, as that safety haven and pouring all their capital in the Japanese market, which of course will give you the more positive performance against any other global index out there. So let me get out of that. So that's looking good, but as I said, we need to watch that very carefully because it's still within our zero or golden zone. Once it gets outside above that level right here, that can be another buying opportunity. Let it ride up, and then historically, you may be able to use it as a sell signal. But if you were watching this every day, that's something definitely to watch. All right, so let's go back to our... Now, again, this is why we have the 4-hour chart as well. Because here we have an overall downtrend, but it's breached the support. It's coming back down. But the question is why? Why? And that's where, again, our patterns that we want to implement still need to be done. We'll confirm what's going on here. Because we have downward trend, but for now, we are definitely getting some performance here during a down day and a steep down day that we've had just alone today. So I don't want to look at these. Well, let's see what the signals are saying. What are our signals saying? Interesting. So we had a little bit of buying opportunity right here, and we have a sell. Ooh. But we'll check out the hourly, see what it says. But could this be the start of a down? But if you look at the historical right here, we had one sell and it bounced back. So again, we need to use some other indicators to figure out what's going on here. And this is the absolute hardest part of trading because of the market's random walk, as they call it. Let's see what our signals, our moving average is saying. Okay, so again, we talked about the little red line, which is, I believe, a 50-day. But here, ooh, this may be good. This may be what we talked about earlier. Let me just see here. Sometimes I don't know how to use the utilities. That would help, wouldn't it? Oh, here we go. Okay, so this is our hourly. Booyah. We have a sell cross right here. It's tightened up a little bit between these two. This is our long-term 200-day, 100-day moving average. And we have it bouncing back. And that is coming back. That is right here a buying opportunity. Now again, this is an hourly chart. Okay, oh sorry, 4-hour chart. But we had a buying opportunity here on an intraday level. And it did pop up, flatlined for a little bit, and then came back down. Again, that's why it's important that we get these dates fixed so we can able to precisely know the timing of this on the daily chart. Okay, so that is a good signal, but what I worry about is this right here. Yes, I do. Let's see what it says here in the 4-hour. I don't know if we looked at this. Did we look at this? Here we go. Boom, boom, boom. We have a long-term. Now, again, this is our. Is this what we want? No, we want our. Do we look at this one right here? Yeah. Okay, so we're going to go into intraday mode if we want return. We definitely. Boy, I'm not getting my. Okay. So we want the 4-hour moving average. This is what we looked at just now, right? So we had a potential buying opportunity here. Let's see the corresponding signals. What's it saying? So we did have some buying opportunity. We have a sell signal here, 4-hour. But will that momentum continue. This, as I said, this is the hardest part in trading. Shall I look at the hourly? Let's see what the hourly says. Okay, again, we are just flatlining. There's no long-term momentum here. And this is just playing it out to see what happens in the US, I bet. Let me close this folder up. Okay, so we have flatlining, not a lot of moves. Let's see what the signals are saying on the hourly. Again, I think this is only an intraday opportunity. Getting hammered here, coming back, getting hammered again on the long term. This is a tough one to gauge. I wish we had the patterns to showcase that. Again, the moving average here, though, on the hourly, what are we seeing here? We are seeing, okay, so it is crossing here, the 50 and 20 day hourly. So there is, but here's our dilemma right here. Everything's flatlining, everything's pointing down. And then once we breach this moving average, the 200 day breaches, actually it did breach the closing price. So that's a definite selling opportunity. So if you want to short, you could probably make some money, but my strategy right now does not want to short. It's just too sensitive where I'll get clobbered. I'm not an expert in shorting, and a lot of people are not. But if you ever want to short, definitely a shorting opportunity. So let me just see the stats on that. Let's just see what this means. Again, there's not much to tell from these stats here. Okay, but on the short term, it is definitely a shorting opportunity. And if I have better patterns, I definitely use them. Okay, our next index we want to look at is the US 30, top 30. So you're probably interested to know what that means. So let's say on the S&P top 30. Oh, we don't want music. US top 30 quotes trading view. What is the top 30? Okay, US industrial is one of the most closely. So this is a Dow Jones. Here, let's check this out. See what our underlying. So this is a Dow Jones Industrial Average. And there's a fundamental. We'll do that in a little bit. We don't care about this. Instrument description. Anyways, hopefully you know how to use Google. So that's what we're looking at right now is the Dow Jones top 30. Let's check out what we have in the charts. Okay. So we are looking for the US top 30, lots of stuff in there. UGG. US 30. There's the 500. Okay, so here we are. Let's check out the daily trend lines. What's it telling us? There's some slight momentum. It's been hammered over the last couple of weeks, as you can tell here, but it could be bouncing back. It did breach that lower resistance or support line, but it has come back. The thing is about these kind of things, especially on the stock indices, it's the algorithms that bring back that recovery. There are just so many of them now that they're the ones that can drive the recovery. But let's see what the signals say. See, we've got that long-term momentum. Sell, comes back, sell a little more. That's a tough one to say. We'll have to look at the more, like moving average is a good one. Let's see what we have here. Okay, so historically, we've got a moving average. It hasn't quite breached it, but if we know that this 200-day moving average gets breached, then that's a classic sign. But here, it has breached it here. we came very close for a buying opportunity here, this one right here, and it's starting to widen again. So it is some momentum for down momentum, because the 50-day and the 20-day are definitely widening. So that's a good indicator there on the forward looking. So let's go back into the 4-day, 4-hour trends. Let's see what that's saying. And we have, again, downward movement. We have bounced off the resistance. Okay, so this is going to be interesting. Here we have the closing price just gonna above the resistance. Historically, you can see here that this may, there's going to be obviously one of two scenarios. It may just bounce off of this trend line, the resistance, and bounce back up, or it will breach that long-term 200-day moving average. Okay, so this again is a tough one, but let's see what it's saying. And again, I think everything will be in the hourly. So here we have a sell, buy. Now this is where the algos kick in, and then it just gets killed again. Now, from what I'm seeing and what I'm hearing in the Bloomberg news, in order to have the momentum of the longer term trades, you have to have breadth in the market of a long-term momentum. That ain't happening. We are coming into reporting season, so there may be some short-term stability in the markets, but overall, when you look at the fundamentals, which I'll look at in terms of the macroeconomic, everything's pointing down. So I think there may be some short-term bounce for a little bit, for maybe, let's say, 30 days, 45, 60 days max, but there will be a long-term downward trend if, and I don't think this will happen, if the macroeconomics fundamentals don't improve. That's what I see, at least in the U.S. But there's still some healthy signs in the emerging markets. So here, we're moving average. Again, our 200-day is just higher than everything else. So that's not a good sign, and everything's pointing down. So I don't even need to go into that. But if you want to look at those Fibonacci's, let's check out the Fibonacci valuation for the daily. Let's see if it's still slightly overvalued. And again, this may be another thing that we may need to look at, because we want our pricing to be in here. So what may happen is, as the pricing of this index comes back down and gets hammered and hits this level, it may stay in this range for a while. But if there is just out of some kind of miracle, it may bounce off this level and pop for the short term. But everything really does come down to confidence in the markets at the macro fundamental level. And from what I'm seeing, everything's pointing down. And also, obviously, it depends upon the outcome of this trade war that's brewing. Okay, so have we looked at this enough? I think we've gotten a pretty good idea of what's happening in the U.S. Index. So I've given my prediction of what could happen. I'm not saying it will, obviously. But here, let's check out another defensive play, the German index. So let's see what this one contains. Obviously, this is out of Germany. Let's see what these guys have. So, Deutsche Euro. Okay, so that is our source. Let's see what it says for the Dukascopy out of Switzerland. So again, we're going to talk about this, but these are just charts, no analysis. Okay, so digging around for the top 30 or the Deutsche Index, I'm just going to go with the DAX overall performance and just say that's what it is. Anyways, let's continue along with the analysis for the we'll call it DAX, Deutsche. Again, this is from Dukascopy out of Switzerland on how they define it. These are CFDs. I've talked about that numerous times as well. I'm not going to repeat it in this video, but let's check out the trend line, long-term trend line. Let's see if we have some growth here. Okay, so long-term trend pointing up. That's okay. Let's see what it says on the buying signals, if there are any. Not too good there. Moving average reveals a lot, obviously. Okay, so it is below. It's tightening up here. If it continues moving up, then we have a buy signal. And definitely, I can probably guarantee you will be below undervalued. Let's check that out to make sure. It is in our golden zone, so it doesn't really matter there. But it is priced nicely. So these may be decent little opportunities on a conservative, not great performance, but adequate performance if you were forced to trade today and had to trade. These are probably some interesting areas to invest into. Now, again, let's check out the trend line on our 4-hourly chart for this Deutsche, the German. So this is really good. So here, support and resistance, bouncing off it, boom, nice. I don't know if these really matter, these statistical reports here on the returns, the daily moves, more negative as usual. Not something to be proud of, obviously, but it's there, and that's the numbers don't lie. So here in the 4-hour, we can see that it's been historically a few buying, but too many selling. And again, judging from that historically alone, that's something I'd be just sitting on the sideline waiting to see what would happen. All right, so let's see what the moving averages are telling us. Okay, so again, we may have something here. This right here, golden time to potentially buy into. It is undervalued. It just depends on what goes on. We really need to know what's going on in the German economy, economically speaking. Guess what? I'll be doing a video on that because I have access to the data. And we'll definitely be able to gauge that in the German market. And then that probably will reflect overall. I shouldn't say that. Let's put it this way. From what I've seen, the German market really drives the Eurozone outside the Scandinavian, like Norway or Sweden. Because we'll see in the Forex that there is some hot capital moving into the Swedish kroner. I always forget the two. But here, the buying opportunity. Okay, let's if we need to, we can always look at the hourly chart here. Let's see what it says. So definitely approaching the support. Let's see what I have here on the hourly buying signal. Ooh, some momentum starting to build here. This may be a decent intraday opportunity. Let's see what so we know on the 4-hour we had a buying opportunity there, and you definitely can see that something's going on. But again, when you look at the buying signals on the daily, historically, we do know we shouldn't get too excited there because we do know what will happen is where we get buying opportunity. Actually, I didn't see this before. There's more buys, definitely a lot more buys than the selling. So this may be a decent little market to get into, this Deutsche. So that is something, again, could be a defensive play as more capital moves into the Deutsche index as well as the Japanese. So again, we'll be able to look at that with the indicators that we have using Germany. So that is something that may give you some outperformance over the long run that you won't get in the U.S. So very interesting. And again, we've not heard about any potential trade war in the last few days with Germany. So Asia obviously is going to be off the table, but as long as there's probably no announcements with Germany, we should be okay. And that's probably what the pros, the institutions are thinking as well. Let's not put money into the Japanese or the Asian market overall. Let's put it into Germany. And that's possibly happening. Who knows? So enough of that. Let's check out the Forex. Now, again, it's very abysmal returns, but we'll just check out two of them. These ones here, as I said earlier, the Euro Swedish and the USD Swedish. Let's check out those two. These ones I find probably an anomaly if you ask me, but let's just check them out, those two. Because Sweden has been talked about in the news as a place to go, as a defensive play. So first we want the Euro Swedish. Let's get her same analysis, access to everything. And again, this is if you were to deploy capital. You want maximum potential returns on the short term. And if you are forced, again, to trade. So originally it was the Asian currencies that were doing quite well. But voila, we have a nice daily trend. Just nice. That's a nice upward momentum recently. And again, that's probably, as I said, a nice defensive play. All right, so again, we see lots of buying opportunity there. This is a nice for currencies. Moving average, I'm sure that'll look good too. Very nice. We had buying opportunity here. It is widening, so that means profit in your pocket. This is pretty good. Now, is it worth buying into today? On the daily, let's check it out. Is it in our golden zone? Probably not, but we will. Yeah, it's overvalued because it's way outside our golden zone. So the timing's not good, but if we were to automate that every day, we would be able to see the opportunity. And as you said about the German index, that may have been, and right now on April 2nd, may be, as an example, be a decent buying opportunity. Correct. Okay, so knowing that the trend's looking good for the Swedish, would I buy? I don't know. I'd probably put more capital into Deutsche. You're going to get outperformance anyways, but if I was a Forex trader, this is definitely to watch. Now let's see what's going on in the U.S. This one right here, the U.S. and the Swedish. Let's see. I don't do enough analysis because everything all comes down to timing. And if the timing's not perfect, I probably won't deploy it, but the German one looks really, really good. But I'll probably watch for the next little while and see what it does because it's kind of questionable. Let's see what the trends are for the U.S. Swedish. Yikes. That's not looking good. But here's the interesting play. It's down, and it's broken that little support. What's the signal saying? Okay, so historically, we may get a repeat, historical repeat here. Down, 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 down. A few buying opportunities, and it may go back down, as you can see here. I don't know. Let's see what the moving averages tell us. Yeah, see, it's the same. There's a buying signal here, possibly a buying signal here. That's a tough one. Very tough. Now, the key is, of course, is the Fibonacci level in terms of the valuation. It's undervalued, so that may be worth looking at. Let's see what the traditional. This is tough. Again, if only I had the patterns. That looks good, actually, for the 4-hour. It is starting potentially to bottom. The patterns would help. But again, guess what we need really is we need forward-looking data from the macroeconomic level on what's happening in Sweden. Once we can get that, we can confirm, yeah, Sweden looks great out of all the Eurozone. And yeah, maybe we should deploy some capital into Sweden. And let's check out the signaling here again on the 4-hour chart. Yeah. But again, intraday, I bet you will get some uptrend. But remember, all the markets are way down, like really badly down. So Fibonacci, what does this tell us? See, it is starting, momentum starting to build in terms of valuation. Right now, it's overvalued, but again, historically over the last year, let's say, it's undervalued. So you may get some performance there in a down market overall globally. Okay, so I think that pretty well sums everything up. Now, again, this one, no Bitcoin today. But if you ask me about the, let me just pull up the indexes, the equity. Let me just pull this. I'll get it eventually. Is there index? Yes. Okay. So as we've done before, this is just the top performers historically. But again, this video is probably an hour long, right? So for me to try to do this for everything, you'd be sitting around watching a video for 6 hours. So again, I'll try to do that through the automation once it's complete. But again, I just want to show you from a human perspective how it's done. But you can see here, I'm always doing this. We want column C. Okay, descending. Yes, okay. So Japan, no. US, probably not. But the German looks good. The timing looks good for April 2nd here, 2018. Now, if you go into the currency market, this one, that opportunity maybe have passed, but you can still probably get performance. You won't get a lot of performance, so that's the thing. But I think the German index will get you places in the long run. So hopefully I'll help you out and give you an idea how it's done. There's more to be done, obviously, on the patterns. This is a big one. I'll be also putting out videos on the overall market for Germany and Sweden. That's the ones to watch right now. All the other stuff, I wouldn't deploy capital. I think we want at least some form of positive performance, not this flatlining or even decline as we've shown in the markets today on April 2nd. So hopefully I'll be out. We'll talk to you later. Hey everybody, Brian here from quantlabs.net. Just going to go over the Euro macroeconomic data. It's really charts that we're looking at. I can get access to the raw data off of Eurostats, the website. I have many videos on showing you how this stuff can be generated. So I'm not bothering with that. So as I said in my previous segment, I want to move into Germany. So we have here the data for Germany, the DE here. So we are using the economic sentiment indicator from Eurostats for this. So let's see how we're doing with that. As you can see here, historically, since this has been generated since just before 2010, you can see we are reaching close to a peak historically back all the way to 2011. That's the economic sentiment indicator that the Eurostats office, let's call it, that are generating this data. So this is all forward looking. So I'm going to look at the consumer, the building. So this is a building, construction. The ES I just showed you, industrial, retail, and services. So looking at the German building, again, it's at historical peaks here, the strongest on record, I would assume. That's pretty strong. That's for the building. This is the consumer. Again, not quite, but it's up. So then we have the industrial. This is all forward looking. Again, it's just on up and up and up. The retail. So it's still down, but it is definitely coming back. And lastly is the services. Okay, so it's not quite at peak, but it's probably the third highest level there. So the other one that of interest was Sweden, so that is SE. The same thing. Again, this is forward looking. Now, again, Sweden's doing quite well in the building. Consumers down a little bit. Overall on the ESI, not too bad actually. And then the industrial, it's definitely hitting records since 2010 again, since they've been recording this. The retail, not so strong. I guess that ties them back into the consumer and the services. Okay, that's down as well. I mean, Sweden's not too bad. It looks pretty strong. So let's do a comparison against the UK. Now, remember, this data will only be generated for the UK as long as the UK is in the Eurozone. And we know with the Brexit coming up that they will no longer be able to get access from this source going into 2019. Here's the building. It's definitely hit a nice peak there. Again, all records since 2010, strongest yet on record. Consumer, down definitely since 2014. Overall, with the ESI overall. All right, so it's slightly down. It's not too bad. Industrial. It's hit a peak earlier last year. It's still flattening, it looks like. Retail, definitely down. Services, so it looks like the construction industry is doing quite well. Services is down as well. So let's do another comparison against, let's say, France. Okay, so this is France building. It's quite strong on record. Not as strong as other economies. Consumer, again, they're getting hit. It's going into negative territory. Two of these is definitely going into recessionary conditions. Here's the overall ESI coming down, so they are nowhere to be found. Industrial coming down. So I really don't think France is as strong as it should be. Retail slightly up. Services, it's not doing that well. Okay, so that's fine. Let's do an Eastern European country just for kicks. Let's check out Poland, let's say, PL. Let's see how they are doing. Okay, so PL, still negative territory. It's coming off. ESI overall. It's hitting its peak overall, so where's its strength? Looks like manufacturing still down, negative there. Retail, slightly stronger. Services, maybe it's the services not on record. Mediocre, I guess you could say. How about Romania? Or maybe one of the wealthier Scandinavian countries, like I believe we have Finland here. Yeah, so let's check out Finland comparatively, and then we'll check out the euro overall. Okay, so this building is close to on record there. Consumer, very strong for the consumer. Good to know. Quite strong, actually, for Finland. Industrial's doing quite well. Retail down, so it's not good, obviously. And somewhat coming back. So there you go there. So let's do the euro overall. It's for the whole market zone. It's definitely, so constructions were the economy's strength is. Consumer overall, how's it looking on record? ESI overall, highest ever since 2010. Let's see, let me get rid of that. All right, let's do the industrial. That's pretty strong too, so we know building and industrial is quite strong overall in Europe. Slightly down for retail and services. Again, this is all forward-looking. It's not too bad on the services front. So that's pretty good. Should we do one more? Let's do Romania. I feel Romania is doing quite well. Portugal, UK, we've looked at. Hungary, Euro, EL, EA, Czech. Actually, the Czech is an interesting one because they keep coming up in the Bloomberg, so we'll just do them instead of Romania. Building, strong, not on record though. Consumer, that's been fairly strong for a while, since 2014. Good to know. How's the ESI looking? Pretty strong there. This is a strong economy. Industrial, coming back, not on record. Retail, not so strong, but holding steady, pretty good. And the services has had a nice run up as well. All right, so when you look back at the Germany and Sweden, I definitely, looking at forward looking, they look pretty healthy. So I probably would proceed with capital deployment in those regions for both the currency pair I showed as well as the Germany Deutsche as well for the index, stock index. Hopefully I'll help you out. Talk to you later.